Good evening, ladies and gentlemen, boys and girls, and holders of coins, great and small. This is your wireless window into the roaring world of crypto, and what a week it's been. So grab your ledgers and lace up those brogues. We're going in. First on the ticker, the U.S. Securities and Exchange Commission has sounded the trumpet for Project Crypto, a sweeping initiative announced July 31st. That's right, the mighty SEC is dusting off its rulebook and diving headfirst into the blockchain age. Led by Chair Paul Atkins, the Commission is proposing to streamline the labyrinthine path for token issuers, draw clear lines between securities and commodities, and even offer new exemptions to let decentralized finance projects breathe easier. They're talking up better investor protections and faster approvals, all in hopes of keeping America at the top of the digital financial heap. It's a bold gambit. Some call it visionary, others call it overdue. But the message is unmistakable. The old guard wants a seat at the new table. And speaking of the old guard, controversy has cracked the porcelain smile of officialdom. Brian Quintenz, nominee for the powerful CFTC, finds himself on the receiving end of a high-octane outcry. Leaked internal emails, revealed through a pesky Freedom of Information Act request, show the nominee cavorting in cozy correspondence with high-powered crypto interests during his prior regulatory stint. Critics say it reeks of conflict, and Tyler Winklevoss himself has fired off a telegram's worth of public condemnation. With ethics watchdogs circling and lawmakers fidgeting, Quintenz's confirmation now hangs by a thread, and the thread's looking mighty frayed. Will he make it through the political gauntlet, or has this horse thrown a shoe? Now, let's trade government for glamour, because Christie's International Real Estate has uncorked a corker. On July 29th, the historic house of high art and higher price tags launched a brand spanking new division dedicated solely to real estate deals conducted entirely in cryptocurrency. That's right. No bank wires, no bankers, just crypto wallets and QR codes. The new unit targets ultra-wealthy buyers looking to swap Bitcoin for beachfronts or Ethereum for estates. With luxury markets still sizzling and crypto coffers brimming, Christie's is betting the farm, quite literally, on blockchain buyers. It's one more sign that crypto is leaving the basement and buying the penthouse. But not all is rosy in Token Town. XRP has taken a licking, and it's not getting up easy. Over the past week, Ripple co-founder Chris Larsen shuffled a staggering $175 million worth of XRP out of his personal vaults, and the market didn't like it one bit. Analysts believe the whale-sized transfer spooked investors and possibly fueled automated sell-offs. As a result, XRP plunged nearly 14%, earning the dubious distinction of being the worst-performing major crypto asset of the week. Compare that to Bitcoin, down just 2.25%, and Ether, down a mere 0.5%, and you've got a real XRP headache. Whether this was a personal reshuffling or something more strategic remains unclear, but traders aren't taking chances. And finally, time to sound the bugles because the boardrooms are buzzing. In a move that's got every ticker in town twitching, corporations across the globe have begun supercharging their crypto treasury strategies. Over the past 6 days alone, a staggering $86 billion has been funneled into digital assets, led by heavyweight firms diversifying into Bitcoin, Ethereum, and tokenized reserves faster than you can say inflation hedge. The top brass are calling it the strategic crypto reserve play, a new breed of fiscal maneuver that trades treasuries for tokens and balance sheets for blockchains. One executive reportedly quipped, "We used to trust the dollar. Now we trust the hash rate." At present, over $100 billion in Bitcoin sits tucked away in corporate vaults, joined by billions more in Ether and other top-tier tokens. Whether it's risk, reward, or a race not to be left behind, the digital gold rush is on, and the suits are stacking sats like it's wartime steel. And that's the roundup, folks. From bold reforms and boardroom blow-ups to digital mansions and corporate coin stacks, the crypto world isn't slowing down. We'll be back next week with more as the blocks keep turning and the headlines keep flying. Until then, keep your wallets safe and your passwords long. Good night, and may your gas fees stay low.